Every single week, the stock market is crushing since Trump took office. Some stocks are down by 10%, others by 5%, but the overall S&P 500 is down by around 2.5%. And that's because Trump is about to start the greatest trade war of the 21st century. It is not going to be like the first trade war that Trump has started with China back in 2017 and 2018. It's not just going to be against Canada or Mexico. This is literally a trade war against everybody else, against the rest of the world. And that is going to have a fundamental impact, not just on the stock market. He's about to reshape the entire global system. He wants to rewrite the rules that the world has been working and trading for the last 30 and 40 years. So here in this video, let's try to understand what exactly is happening, what exactly Trump is going to change, how is that impacting the stock market, and how is that is actually leading to a stock market crash, and what is going to be the end game. If you're ready, give this video a thumbs up, and let's get right into it. Trump is about to impose reciprocal tariffs. Reciprocal tariffs basically means that we as the United States are going to impose any country the exact same amount of tariffs that they are imposing on us. And some people might believe that or think that right now Trump is going insane and he's actually imposing so many tariffs on so many countries. But if you actually dig into the numbers, you'll find out that for a very long time, other countries have imposed really high taxes, really high tariffs on the US goods, while the United States did not do anything in return. Because by imposing reciprocal tariffs, the United States is going to increase the prices for the domestic consumption. And to keep the prices low in the United States, the US simply kept those tariffs very low. But over the last couple of decades, the United States has accumulated such a huge trade deficit that it understands that it no longer can play by those rules, which is why we are changing the rules. The European Union, one of the major trading partners of the United States, has a 50% tariff on all the beef that comes into the European Union. So if from the United States you're exporting beef to the EU, you have to pay a 50% tariff. The European Union also has an almost up to 45% tariff on all dairy products. We are talking about milk, cheese, and anything related to that. There is also a 25% tariff on seafood products. There is a 10% tariff on all the cost that comes into European Union. I guess this is the tariff that Germany probably convinced the entire European Union, because one of the main exports of Germany is cars, of course. And when you have a 10% tariff on all the cars that come into the European Union, while BMW and Mercedes enjoy tariff-free because they're part of the European Union and they can easily sell their cars tariff-free to Spain, France, Italy. The European Union also has a 25% tariff on all the steel that comes into the European Union. So there is basically a quota and the amount of steel that can enter the European Union. If you exceed that quota, you have to pay a 25% tariff. And that quota is specifically designed in such a way that the European steel manufacturers actually prosper and stay in business. If we actually import more than that quota, then those steel manufacturers in the European Union start to suffer, and that's something that the EU does not want to, which is why those countries will have to pay a 25% tariff by bringing that steel into the EU. That's how they actually protect their steel manufacturers. The same thing applies to aluminium. And the United States for a long time did not actually have those tariffs on aluminium and steel. The first aluminium and steel tariffs that were imposed by the United States was by Trump during the first Trump presidency. Because Trump looked at all of this, they're like, wait a second, why on earth the European Union is charging us a 25% tariff on our steel while we don't actually charge them? And that's why the European steel manufacturers, the European aluminium manufacturers survived, but the ones that are in the United States have been actually closing down over the last 50 years. The United States tariffs are much lower than the EU tariffs. For example, on dairy products, it's up to 25% at best. On seafood, there is almost no tariff or whatsoever, except a few exceptions. On cars, up until Trump, there was a 2.5% tariff, and there was a 0% tariff if that car was manufactured in North America, either in Canada or Mexico. And that is the game that Trump is actually changing. And it's actually weird why the European Union had a 10% tariff while the United States had a 2.5% tariff. In this game, obviously the German cars are going to win and dominate the US market, while the US cars or the US car manufacturers won't be able to compete in the European Union. I guess somebody's winning out of this trade deal, and that is Germany. But that game is over because the United States have already imposed like a 25% tariff on all the cars that enter the United States. So if you're charging us 45%, we are going to charge you 45%. If you're charging us 25% like here, we're going to charge you 25%. If you're charging us 50%, we will charge you 50%. So we are simply going to respond to you with the exact same tariffs that you're actually charging us. And because you've been charging us all these tariffs for the last decades or so, we're first going to charge you a 25% on all the cars that comes into the United States, and then an additional 10% just because you're charging us an additional 10%. Imagine how many trade agreements the United States is going to renegotiate. Again, the world is a very big place. There are over 200 countries all across the globe. But if the United States is going to change the trade agreements with the top 10 or top 15 trade partners, we are talking about the EU, Canada, Mexico, Japan, South Korea, and a short list of other countries, then it is going to fundamentally change the entire game. Because the US doesn't trade much with other countries. If you look at the US trade with Argentina, for example, there isn't much trade going on. But if you look at the US trade with Japan, then there are hundreds of billions of dollars annually, and there is a huge trade deficit that Japan is actually taking advantage out of the US economy. But this is just part of the story. The second part of the story is the hidden taxes that people don't talk about often. And these are the subsidies that governments provide. Quite often, when a government wants a single industry to prosper, the government starts to subsidize that company or that industry by giving them tax breaks or giving them loans that are free of charge, or literally just giving them money if they want to, or providing them with some kind of assistance. Suppose you want a steel industry in your country to prosper. You can literally just give them all the money they want and they can sell that steel at a loss. Over time, they will develop economies of scale and they will run out of business other companies, and that's how they will actually dominate the entire industry. And that is the strategy some countries have been following. Even the European countries have been following that. Let's say, for example, BMW is going to spend $1 million in order to buy steel. But because this is Germany, there is a 19% VAT. A VAT is basically value-added tax. Every time you buy something, you have to pay a VAT, even if it's not the final product. So if a business actually buys steels from certain manufacturer, they have to pay a 19% value-added tax. So the total amount of taxes that BMW is going to pay is $190,000 based on that $1 million purchase. Then they're going to go and sell $5 million worth of cars. Each client who is going to buy that BMW is going to pay that 19% in taxes. So overall, BMW is going to collect $950,000 in value-added tax. So the final price at the store is going to be plus 19%. So if the car costs $100,000, then the final price is going to be $119,000. So I'm paying an extra 19% for buying that car. I'm paying that money to the BMW, and BMW has to collect that money and pay it to the government. But because of government subsidies, you can deduct the money that you paid in taxes and simply pay us the difference. So $950,000 minus $190,000, and suddenly the amount of taxes that BMW has to pay is $760,000. And if, God forbid, you're actually going to pay much more in value-added tax than you're collecting, then you can actually claim a tax refund because you're actually made a loss by paying taxes. Now, compare that to a foreign car that comes into Germany. Let's say Ford that was exported from the United States into Germany. Just like any other thing that you buy in Germany, you have to pay a 19% value-added tax. So the final price is going to be higher by 19%. But before that car comes into Germany, there must be paid a 10% tariff for bringing that car into the European Union. So 10% tariff and then 19% value-added tax. Now, compared to the BMW, whose value-added tax is going to be subsidized by the government of Germany, the 19% tax that you pay by buying that Ford is not going to be subsidized by the German government because it's an American car company, which means that BMW can lower their prices and sell their car at a much lower prices than Ford because they know that their value-added tax will be subsidized by the German government, which makes it extremely difficult for American car companies to compete with German cars in Germany or the entire European Union. So even though those 19% VAT tax are not actually tariffs, in the eyes of the current administration, that is unfair trade practices, and we're going to charge you an extra 19% for bringing your car into the United States. And secondly, because Germany is part of the European Union, there are no taxes between the states, which means that Germany can sell their cars all across the European Union. So no matter how you look at it, it's impossible for the American cars to compete in the European Union. And if you give it a general look, then you'll find out that the auto industry actually runs on a very slim, tiny profit. So even a 10 or 15 or even 20% increase in prices is going to have a substantial impact, and those car manufacturers won't be able to sell their cars at a profit. So it makes no sense for them to spend billions of dollars to build those plants and ship those cars across the ocean only to find themselves to make a huge loss. Have you ever wondered why aren't there like BMW pickup trucks or Mercedes pickup trucks? That's a good question, right? Why don't these car companies manufacture those pickup trucks? There is a huge demand for pickup trucks in the United States, and they can sell plenty of them. But if you look at the pickup trucks in the US, it's mostly like Ford, GM. You also have like Toyotas and Hondas, but it's mostly Ford. Why is that the case? Like if you go back to 1960s, there was a trade war between the European Union and the United States. And that's because the European Union suddenly started charging a 25% tariff on all the chicken that comes from the United States into the European Union. And the United States was not happy with that. The president of the US back then was Lyndon Johnson, and he's like, wait a second, why do you guys start charging us a tariff? And the European Union is like, well, the war is over, our agricultural industry is booming, and we want people to buy our own eggs and our own chickens, which is why if you want to sell your chicken in our country, we're going to charge you a 25% tariff. And that's when the United States retaliated by charging a 25% tariff on all the pickup trucks that comes from the European Union into the United States. So if BMW or Mercedes would build a pickup truck and will bring it to the United States and sell it in the US, they will have to pay a 25% tariff. Good luck competing with Ford and GM when you have to raise your prices by an extra 25%. And that's why they never actually build them. And if you look at the statistics, you will clearly see that most of the pickup trucks are being built in the United States. Almost all Ford S-Series are either being built in the United States, and some of the models are being built in Mexico because of the free trade agreement that the United States has with Mexico. The second most popular pickup truck is Chevy, and then Dodge, and then Toyota. And all of these four models are being built in the United States. If you want to sell them in the United States without building them in the US, you have to pay a 25% tariff, and building them outside the US makes no economic sense because you won't be able to compete with anybody that builds them in the US since they don't have to charge a 25% tariff. So historically, imposing extra tariffs and taxes in order to drive and force auto manufacturers or companies to change their places where they manufacture their product is actually possible. If the US could do it with pickup trucks, why can't they actually do it with every other car that exists out there? And that's why the stock market is crushing, because everybody is worried about the greatest trade war that Trump is launching. Now, because Trump is reshaping the entire global trade and he wants to rewrite the rules, that is going to have massive implication on the market. And that's why investors are worried. They're selling their stocks because they don't know what to expect. The moment it will be clear, I think, or I most likely believe that the market is going to bounce back and it will keep increasing again. But because we're about to start this trade war, or the greatest trade war that we have ever seen in our entire lifetime, that is what is causing a market crash that we have right now. But again, remember, every single market crash is an opportunity to make money if you are an investor and if you know how the market works and if you're a really great investor.